All right, let's get right into it. The big question on pretty much every investor's mind right now is this. Are we just living through a repeat of the dot-com bubble, but, with AI this time? It feels so much like 1999 all over again. All the hype, all the promises of changing the world. So that's what we're going to dig into right now. We'll break down the three hidden forces that could be driving this AI bubble, and, most importantly, what you can actually do about it. You've probably heard this famous quote from Sir John Templeton before, and man, is it a powerful warning. Think back to the late 90s. Everyone was absolutely convinced the internet was the next big thing. And you know what? They were right. But being right about the tech didn't stop that speculative craze from creating a gigantic bubble that eventually popped, just absolutely wiping out fortunes and causing the NASDAQ to plummet by nearly 80%.
I mean, just look at the language here. The parallels are kind of spooky, aren't they? Back in '99, it was the next big thing. Fast forward to today, and AI is the once-in-a-lifetime opportunity. The hype, the speculation, it all feels identical. So the giant question mark hanging over everything is, will today's AI boom end the same way?
To figure that out, we've got to look at who's actually driving this train. And it really all comes down to a handful of massive companies in what people are calling the Magnificent Seven's AI race. What's just wild is how concentrated the market has become. These 7 companies, we're talking Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and Nvidia, they now make up a staggering 36% of the S&P 500. That means if you own a simple index fund, a huge chunk of your financial future is riding on how this AI race plays out. And make no mistake, this is absolutely an arms race. Every single one of these companies is pouring billions and billions and billions of dollars into AI. They're not just doing it to innovate, they're doing it to completely dominate the entire field. The stakes are just unbelievably high, and the spending is almost hard to comprehend. And these numbers, wow, they're just staggering. In a single year, Amazon has pledged $100 billion for infrastructure. Microsoft is at $80 billion for OpenAI and supercomputers. Google, $75 billion. Meta, $60 billion. It just goes on. The sheer scale of this investment is unlike anything we have ever seen before. So add it all up, and you got a grand total of $330 billion pledged in just 1 year. To put that into perspective for you, that is more than the entire gross domestic product of a country like Finland. Now, all this spending is what's fueling the AI boom, for sure. But it also begs the question, where is all this money actually going? And that is where things get really interesting. This brings us to the second force at play here, something that's being called the AI money machine. This is the part of the story that pulls back the curtain on the hidden mechanics that might be artificially pumping up this whole boom. Okay, so stick with me here. Let's break this down step by step. It kind of works like this. Microsoft gives a company like OpenAI billions of dollars in funding. Then OpenAI turns around and pays that same money right back to Microsoft to use their cloud computing services. Microsoft then takes that revenue and uses it to buy the essential AI chips from Nvidia, and then to complete the circle, Nvidia invests some of its profits back into, you guessed it, companies like OpenAI. You see? It's a closed loop. This analogy just makes it so clear. Imagine you pay your friend $1,000 to dig a hole in your yard. Then he immediately pays you $1,000 to fill that same hole back in. No real value was created, right? But on paper, you both just recorded $1,000 in revenue. And if your company was valued based on that revenue, well, your whole digging business would suddenly look like it's worth a fortune. So that's what we're calling the AI money machine. It's the system where money just moves around between these huge companies. Every transaction gets logged as revenue, which helps push their stock prices higher and higher, even if no brand new external value was actually generated from a real customer outside this little circle. The old mining analogy really sums it up perfectly. You've got Nvidia, and they're selling all the shovels, the computer chips. Then you have companies like Oracle providing the land, the data centers. And then you have companies like OpenAI who are digging the quarry. They're all helping each other get people excited. But here's the kicker. Very few of them have actually struck gold yet in the form of real, massive, sustainable profits. And this whole situation leads us to the third major hurdle facing the AI revolution. It's a very real physical limit to its current path of progress. We're talking about hitting the data wall. This timeline really highlights how urgent this is. AI progress has been moving at an absolutely breakneck speed. But there's a deadline looming.
Some projections are suggesting that by as early as 2027, AI models will have basically consumed all of the high-quality, human-generated text and data that's available on the public internet.
Think about why progress has been so incredibly fast. It's pretty simple. We've been feeding these AI models literally centuries of human knowledge. Every book, every article, all the research, everything. But what happens when the buffet runs out? What happens when the AI runs out of food? Well, progress could slow down dramatically, which might just cause those sky-high expectations baked into these stock prices to come crashing down.
Okay, so with this AI money machine and the coming data wall, the risks are pretty clear. So what in the world does this all mean for you and your money? Let's break down a practical game plan.
All right, let's just address the big question head on. Is it a bubble? Well, look, the signs are all there. You've got the overvaluation, the questionable revenue, the mania. But, and this is a big but, this time is a little different from the dot-com era. These AI companies have real products and a much clearer path to actual profits, even if they aren't quite there yet.
So what's the playbook here? First off, just keep investing. The key is to automate your investments, say every month, into a broad, low-cost index fund. And whatever you do, don't panic sell when things get choppy. Second, focus on increasing your income. Your income is the fuel for everything. The more you make, the more you can buy when assets go on sale. And finally, number 3, focus on diversification. Spreading your money across different things like stocks, bonds, real estate, that's the ultimate key to surviving any market bubble. Look, a bubble bursting isn't the end of the world. In fact, for people who understand what's going on and don't panic, a big downturn can actually be the single greatest wealth-building opportunity of their lifetime. So the final question isn't really about the risk. It's about being prepared. The AI bubble might be very, very real. But the real question is, are you ready to seize the opportunity it could create?